everyone, this is Rebekah with the Tailored Realty team.
Hey, I'm Oliver.white with Fairway Independent Mortgages, Minneapolis.
All right, welcome to another stunning rendition of Tailored Tuesday. Today's topic is how to snag the lowest monthly payment. So, again, I'm Rebekah, and then this is Oliver.
Yep, I'm Oliver with Fairway Independent Mortgage, talking about kind of some tips or tricks to get the lowest monthly payment. When it comes to buying a house, aligning all finances, looking at the principal, interest, taxes, insurances of the new purchase. And just to kind of jump right in, if you don't mind, I'll just kind of scoot over and talk with you and talk to people watching. A lot of times, of course, private mortgage insurance. So you're putting down anything besides 20% on a conventional mortgage product, you're going to have something called private mortgage insurance. Okay, what that is, it's essentially a coverage percentage, essentially insuring, the mortgage to that 80% loan to value. So I'll kind of jump in front of that and maybe get back to that in a second. But as a lot of clients know, first-time home buyers, people that have owned homes in the past, kind of the gold standard, the number we're trying to hit is 80%, right, loan to value. So
Oliver, hello,
Yeah.
Hi again. So what if I don't have 20% down? Can I still buy a house?
Absolutely. That's a great question. I love how we're kind of ducking in and out.
Like, hello!
That's right. You for sure can. I mean, we have conventional home loans, FHA home loans, as little as 3% down, 3.5% down of the purchase price from a down payment perspective. With that, and conventionally speaking, specifically, there will be PMI, typically monthly, but there is a way to alleviate or terminate that, or not to even have it moving forward monthly. And you can do something called a single paid private mortgage insurance option, which essentially think of like a lump sum, at closing to kind of prepay monthly private mortgage insurance, okay? Which then reduces kind of what your monthly outflow is. And then of course something called a lender paid mortgage insurance option, which is a favorite of mine right now for a lot of my first time homebuyer clients, because essentially the lender myself is kind of prepaying, kind of factoring into the interest rate, that mortgage insurance. So for example, just like quick math here, say your private mortgage insurance with a 5% down payment equates to $100 in a mortgage insurance premium monthly. What we could do and possibly take a look at is taking a smidgen of a little bit of a higher interest rate. And again, not the end of the world, we can come back to that. But say we take an eighth higher of an interest rate, okay? And your payment adjusts by $13. Okay, $13. What we can do actually is cancel or not have any private mortgage insurance.
Whoa. So for those of you watching at home here, what Oliver is saying is that, of course, when we're looking at your mortgages, there's a couple of big things that people are always looking for. They're looking for what's your purchase price, how much are you putting down, and of course, almost everybody always asks me, what are interest rates doing? Of course, I can't answer that. People like Oliver can, because he's a qualified mortgage consultant. But what Oliver is saying is that it might not actually be in your best interest to just snag the lowest interest. What he is saying is that if you're putting less than 20% down, you might be able to eliminate private mortgage insurance, which is a huge percentage of your overall monthly payment, by taking a slightly higher increase in your interest.
Yep.
And he's saying that the difference would offset so that you still are having a much lower monthly payment to opt to have a slightly higher interest rate.
Yeah.
Which sounds counterintuitive, right? Totally counterintuitive.
But I agree, because everyone's so trained to want the lowest interest rate possible. But what I like to do is, of course, try to work with clients in that regard, but also try to see the bigger picture. Right. So for example, say you're buying a home and this isn't going to be your 30-year home, but rather a 3-year starter home. Right? And what's really important to you is the monthly overall costs associated with owning that property. Sometimes it actually makes more sense to take a lender paid mortgage insurance option. Say you put 5% down or 3% down, you can actually take a lender paid mortgage insurance premium option, thus maybe a little bit of a higher interest rate, so your payment increases by $14, but we save, say, $75 to $100 because there's no need for mortgage insurance. So it's actually a cheaper monthly payment for you, even with taking a little bit of a higher interest rate at that 5% down mark, for example, because we don't have any private mortgage insurance that carries monthly.
So I think that that's super beneficial to hear that, because I've been in this industry for 7 years now, and it's very uncommon to hear people talking about an option like this. So this is huge. This is like a mind-blowing option to say that it's all about what is the bigger picture overall and what are your goals? Because if you're planning on holding on to it for forever and ever and ever, like, then that might not be the best option for you. But if it's this is my first home, this is a starter home, then that might be a really good option. So now, is this an option available for conventional, for FHA, for VA, or what types of financing is this option available potentially for?
Yeah, that's a great question. So it is available for conventional mortgage products. FHA is going to carry mortgage insurance no matter what. VA is not going to have any, and of course USDA, we're going to have a funding fee or an annual premium associated with the USDA. So it's more or less specifically for conventional. Okay, and it's kind of a niche product, but that's the biggest thing in which I like to talk with clients about is when I first kind of have initial conversations. It's yes, I know interest rate is important. Definitely, it's the number one question I'm always asked. But number two, and maybe sometimes even more importantly, is what are your goals with the home? How long do you plan to live there? Do you see yourself ever keeping this property, right, as an investment in the future? So stuff like that is very much important to me when talking about, the monthly payments, the interest rates, how long of an amortization term. So there's a lot of things that go into really situating and aligning the best kind of angle to go with. As you know this, every client's different. Every client and their mortgage needs and what their goals are going to be different. And that's what's really important for me to ask those questions and to have different options to present and to go over the pros and cons of each.
So I think what Oliver here is demonstrating is the exact reason why you want to talk to a qualified mortgage consultant such as Oliver. Because if you go online and you're just like plugging in interest rates and everything else, you might actually end up with a much higher payment because you don't have somebody specifically looking at your file that has the expertise to guide you and say, here's how you can actually get the lower monthly payment depending on what your goals are. So your goals are completely important in determining what route you go for. So that's really all we have for you today, everybody. So the big takeaway is it's not all about your down payment and your interest rate. Your private mortgage insurance and your options really play a big factor in what your monthly payment looks like overall. So?
Yep, and I want to say thanks for having me on, of course, and again, kind of to reiterate and to kind of drive that point home, if it's with me or somebody else, make sure you're talking and having conversations with your mortgage advisor, just because there's so many different products, there's so many different programs. Just make sure that your mortgage professional is listening, taking notes, really trying to work through what your specific goals are, because there's definitely some great products out there.
Thank you so much, Oliver. 10 minutes with you, and hopefully it saved you a couple $100s on your next payment. Have a great day, everybody. I'm Rebekah with the Tailored Realty team, and again, this is Oliver White with Fairway Independent Mortgage. Make sure you tune in next Tuesday at 10 a.m. for another stunning rendition of Tailored Tuesday. Thank you, everyone. Have a great day.
Awesome. See ya.